We talk a lot about the manipulation of silver and gold by the big banks. At Royal Metals Group, we encourage financial advisors and insurance agents to look at accumulating physical metals for their investment clients. We believe that when investment advisors wake up to gold and silver, precious metals will go mainstream and pricing will hit all-time levels.
For me, I've been saying this for a number of years now. Silver is the biggest opportunity I have ever seen.
Inflation-adjusted stocks have done zero. From 1950 to 1965 and 1983 to 2000, we can see the stock market performed well for investors. When you look at 1965 to 1983 and the last 10 years, stocks barely outproduced inflation. By contrast, the average annual gain gold achieved was an astounding 15 to 20% over nearly 11 years. I say outstanding because this occurred during the wicked secular bear market in general stocks. In early 2000, the flagship S&P 500 traded over 1,500, and today, over a decade later, it is struggling to hold on to 1,200. The S&P may have done bad over the last 10 years, but if you price our wages in gold, Americans have fared much worse. In 1971, a year's pay got you 260 ounces of gold, or $10,600 in fiat dollar wages. In hindsight, 1971 was sadly the high watermark for Americans' real average wage. As debt levels exploded in recent years, real wages have hit a new post-1959 low. By 2008, real average wages were just 53 ounces of gold on 41,335 of fiat wages. Even with no accounting for all the massive wage-reducing tax increases and mandates since 1959, it's very clear that the wages of average Americans measured in the real money of gold have fallen by at least 70 to 80%. 70 to 80%. It's very hard to grasp the effect of tens of trillions of dollars of real purchasing power of the average American stolen by bankers' fiat money creation. At today's price of gold, today's fiat money wages of the average American would need to be about $300,000 just to be even with the 260 ounces of gold Americans earned on average in 1971. With Americans facing the real prospect of declining wages, shrinking investment portfolios, naturally they are looking at precious metals as an alternative. The question is, will their financial advisors and agents recognize this opportunity, or will they continue down the path of underperforming equities, annuities, and bonds? Contact Royal Metals Group to find out more information about getting your clients into gold and silver bullion.
Never been here as a nation before. We've never been, where we've increased the money supply, 180% in 2 years. And when that comes home to roost, people are going to be in for a rude awakening. You got quantitative easing round 1, quantitative easing round 2. There's really no end in sight to the bailouts. They think that there's a recovery coming, but I believe in a good diversified portfolio. It's just now at this time in history, I do a lot of due diligence. I read a lot of books. I stay up nights, 6 o'clock in the morning I'll stay up. Just reading articles, watching YouTube videos, educating myself, because that's really my job as an investment advisor, is to educate myself on what are the available investments to our clients. So what my job and what we're doing with Royal Metals Group is we're trying to help educate insurance agents and investment advisors to show them an additional asset class that they can diversify their clients into. So if you want your money out of your mutual fund, you're going to have to call up your broker or put, log into Ameritrade and actually sell off your position to extract the value and then wait for your cash, okay? Well, if we go through a major catastrophic event in the stock market, what the neat thing about precious metals is I don't have to worry about whether Ameritrade is going to be around tomorrow, or E-Trade or Ameriprise or Merrill Lynch, Edward Jones, Charles Schwab, Prudential, if Principal, Financial. I don't have to worry about that if I have my money in precious metals. So I can diversify a portion of my clients' portfolios into precious metals and know for my clients that no matter what happens, for that portion of their portfolio that I've allocated to precious metals, they have zero third-party risk. When you sit down with mom and pop, they don't understand all the facets, all the intricacies behind our economy and the world economy. And, so what precious metals can bring to them is it can bring a peace of mind for that portion of their portfolio, that doesn't have to be subject to currency risk, investment risk, reinvestment risk, default risk, credit risk. They don't have any of that stuff when you have, precious metals in their portfolio. I believe that this is the time in history for precious metals because I believe that there's going to be a lack of faith in our currency going forward. And we control the majority of the wealth. There's $14 trillion out there in investable assets. So, all the gold in the entire world is only priced in $7 trillion in US dollars. So, but there's $14 trillion of investable assets here in the United States. That's let alone property and farm ground and all that stuff. So, if just a small fraction of that went into precious metals. You'd see, silver go to like what SGG Bull says. He's, $960 an ounce silver. It's all about supply and demand. There's only so much of it, and that's the neat thing about a finite resource like that. There's only so much.